What up, everybody? Welcome back to RoyalBluFX. In today's video, we're going to talk about the 5 reasons why you lose money in the Forex market and how to get better. I also want to make a major announcement. RoyalBluFX has officially released an online course on our methodology and how we trade. Go ahead and click that link in the description below to join our course today. And as we do this once a week, we always pick 3 winners for a free consultation, and they're right here. Every week we hold 3 consultations for 3 winners. All you have to do is subscribe, because I will be checking. Comment done and tell us what you plan to do with all that money that you make in Forex. So let's get in this video.
Nothing can stop me, I'm all the way up. All the way up. I'm all the way up.
Let's start with number 1. Number 1 is chasing the markets. Now, this is very typical, right? Obviously, when you're trading, a lot of times you're probably always going to have this fear of missing out or fear of losing, maybe. And a lot of times when we look at the markets, we tend to, just look for any excuse for us to start placing a trade no matter what, right? And so in this case, chasing the markets, right? So let's talk about this kind of quickly. So let's say when prices are going to an uptrend like this, right? And then now you've been told, obviously, when you wait for a break of structure, you wait for price to break structure, right? You wait for price to retrace, right? But what if that retracement doesn't happen all the way back to an area where price should, go back down to a demand, right? But rather price stops like this and then price continues to the upside like this, right? Now, what a lot of people tend to do is start chasing the market, start placing orders right here and thinking, well, hey, okay, when I see this area, sort of curve or sort of retrace and then start pushing to the upside, we're immediately starting to put orders, right here, right? And hoping that price is going to extend, right? And that's the misconception of traders, is when we are chasing the markets, prices and we're not obeying our rules, right? That will be number 2 right here, where we're breaking our rules or we have no rules in place. So therefore, again, when prices are retracing, and then the markets are starting to reverse like this, there's a lot of ideas where traders in this case, right, are looking to start buying when there's no sign of confirmation where price is actually supposed to be going to the upside, right? So in this case, chasing the markets, right? Chasing the markets can be in any form, maybe like this too. It could also be a double bottom, right? Where a lot of people are taught that break and retest strategy, right? When you see one bottom, you see another bottom come here, and then you're looking to buy, right? Which is very wrong, right? You can see chasing the markets when prices are, let's say again, when prices are retracing now here, right? Breaking structure. Prices are retraced, and then prices are have broken structure here. Prices now are retracing to the upside, right? And then all of a sudden prices are going down like this, and then now you're thinking to yourself, okay, well it's a sell now, right? So I need to now sell this when price is just about breaking, right? And then come to find out that prices are actually just mitigating an area right here of demand, and then prices are just shooting right back up to the upside like this. You all have probably been in a situation like this, right? So there's many scenarios where prices are, where people and traders are chasing the market, and the only reason why is because you don't have any rules in place, which will be our next topic. Okay, so in order to trade effectively in the market, we all have to have rules intact. Okay, rules is what we all need to follow in order to succeed in our markets, right? Now, normally when we as humans, when we grow up as kids, right? Think about it how you like to break rules, right? We've all broken rules here and there, right? Well, if you remember how our parents would be like, oh, well, hey, if you follow this, you're going to get this. If you do this, right, you're going to get this, right? So it's a disciplinary. So these are disciplinary rules for you as a person to follow, right? So you as a trader, you need to follow these rules. So whatever these rules may be, you need to follow the rules, right? So if we had this uptrend that when price is going like this, right? If we had our rule to say, okay, well, price is going an uptrend like this, and price is breaking, okay, that's our first rule is to wait for price to break, right? The second rule is wait for price to retrace, right? Back down to a demand like this. Okay, and then maybe our next rule can wait. We could tell ourselves, okay, well, we need to wait for a change of character. Okay, that's a third rule, right? The fourth rule is, okay, once that change of character has happened, we need to wait for price to come back to an area of demand. That's our fifth rule. Then our sixth rule is to enter a trade and hold this trade and up to this current high right here, right? That'll be our seventh rule, right? And once price gets to this high here, then that's when we exit that trade. All right, that's our eighth rule or whatever. All right, these are all rules we need to follow in the markets, and that's why it's very important to not chase the markets, right? That's why it's also very important to know how to not lose money in the markets is by really following your rules. Okay, so another topic is the impatience. Okay, impatience is so important. Patience and impatience, right? You don't have the patience to take a trade, right? All because you were taught to, or maybe you weren't taught, but you have this thought in your head where you think, okay, well, let's say when prices are going up again, right? And then you have this thought in your head, well, hey, okay, I just don't have the will and the patience to wait for price to retrace, because now I see prices at its all-time high, and now I'm just going to start buying, all because price is at its all-time high here, right? Well, what you're doing is you're telling yourself that that you don't have the decency, the decency and sort of that the calmness in you that you need as a trader, okay, to wait for prices to come back to you, to wait for these certain moves to happen in the markets, to wait for those certain footprints to occur and to happen in the market. So if you're looking at the subtrend, right, maybe our patience would be something in this case where we're just going to have to wait so patiently for prices to get back down to a demand, right? I mean, it's so important. It's so ethical to think about this, right? It makes so much reason for us to wait for and be patient for things to happen in the market. Now, again, patience could also mean to also wait for certain things to happen in the market, like that retracement, right? And what is that retracement actually telling us when price is retracing? Okay, when price is making lower lows like this on a retracement, and we know price needs to get back down to a demand area. Okay, these are certain things we need to be patient for, right? We have to wait and be patient for the market to give us these certain signals in the market. So when prices touch our demand area like this, okay, now we need to be patient to wait for something else to happen in the market, because just because it touched our demand area doesn't necessarily mean we should just take a buy right away, right? We need to be patient, right? And a lot of impatience can occur when prices sometimes like when they come very close down here to this demand area, right? And prices are starting to push up, and you're like, oh no, I'm fearing this now. I'm fearing I'm missing out. I got to get in, and I need to start stacking orders right here, right? When all of a sudden price gets right back down to your demand area like this, and now it's changing character or whatever, and then pushing price up. Okay, all because you were so impatient, right? And you're breaking your rules, right? And you're chasing the markets. That all entails into how you form as a trader, how you are as a trader, right? A lot of the times as a trader, you're going to find a lot about yourself, okay? And you're going to be needing to be able to exercise these certain traits about you. That's just how the market goes, okay? The markets will teach you a good, a thing or two in the markets in terms of how you perform as a trader, how you behave as a person, right? And not to make it all seem amazing here, because obviously we're all humans. We all make mistakes, right? We break our rules. We're impatient, right? We have our fears and our greeds, in everything that we do, right? But I think as far as trading goes, we can definitely have a good practice on practicing our ways of emotion, right? Which leads us to greedy and fearful, right? So another part about this really is the greed and the fear. Now, greed and fear is how a lot of the markets move. Okay, you've probably heard in the markets where when people are fearful, be greedy, and when people are greedy, be fearful, right? Well, if we understand the psychological part of the market, that 99% people lose in the markets, right? We can understand if the 99% are selling, we can see that, that 1% is buying, right? So we can tell ourselves, okay, well, if that 99% is selling right here, we can tell, okay, well, that's the 99%, and they're losing money because they are unaware of what the market is doing. They're unaware of where the market's directional bias is, and the directional bias is an uptrend, right? And they are all selling. So you can tell yourself, okay, wow, well, when prices are retracing, I need to be fearful right now. I need to fear because everyone is being greedy on selling on a retracement, right? But if we could just understand this one piece of information, this is just one little bit part about ourselves, is to be patient and follow our strict rules according to our chart. Obviously, as you can see here, we can be relieved and let out all this, fear and greed and impatience and and all this thing about chasing the markets, right? We can push all that out and then really just be completely patient, right? So greed in this case, we would be greedy when prices tag our demand area, right? Wait until prices actually give us that formation of that change of character again, right? For prices to push to the upside. This is when we can all be greedy, right? Because now and the only reason why is because the price is giving us these signals, these perfect signals that we've been waiting for price to extend to the upside, right? That's the only time. And then others who've been selling here are fearing this huge buy, right? So that's how it all works, right? We need to be patient for these things to happen and occur in the markets. All right. Now, I'm going to talk about this one just a little bit, and this is the next one, which is the reward first before risk. Now, a lot of us, when we start out trading, or also even before trading, I mean, anything outside of trading, a lot of us are always looking to make a quick buck or make quick money, right? A lot of us think about the reward first before anything, right? Well, in this case, it's reward before risk, okay? It's so important here for you to know that the way to trade is to never think about reward first. It's never to think about reward first, but rather to think about risk first. Okay? And the saying goes, it's the risk before reward. Okay? In order to be a really good trader and to stop losing money, you really need to control your risk. Okay? And what do I mean by that? Well, we're going to talk about it a little bit right here on this theory, me drawing out the chart for you guys, and then we're going to go into a live chart after this. But I really want you guys to understand this. So let's say in this case, when prices are going to the downside, right? Like this. And then prices are retracing back to an area of supply. Prices has a change of character. Then prices are here now ready to execute for the sell-off, right? Now when prices get up to this area, right? Let's do this. Okay, here we go. All right, let's make that 10%. All right, here we go. When prices are retracing back to the supply area, now we're ready to take off, right? We had that change of character right there. And let me mark this out here. Right there, there's our change of character, right? And then this is when we're looking to take off, right? Now, when prices get to this area, notice how, here's our change of character tool, right? Sorry, our risk to reward tool, right? Now, notice how we have this risk size here, right? And how we have this reward to the downside, right? We can easily say to ourselves, okay, well, let's pretend this diagram here is the 4 hour, right? And the 4 hour is how we're determining our direction, okay? So when we're seeing this 4 hour and determining our direction to the downside, right? We can place our risk tool like this, right? We can say to ourselves, okay, well, I'm just going to place our risk like this on the 4 hour, and then our reward to to the downside here, okay? Now, generally speaking, you are controlling your risk here, okay? You're controlling your risk only because, and you're thinking about risk only because you are already considering this risk to reward tool, okay? A lot of traders out there don't have these tools, therefore, or don't use these tools. Let me just say that, and don't use them, and then they just willy-nilly, enter trades like this, and then just hope to take a sell, right? And then what do you know? Price goes against them, and then they're still in the trade while price is extending to the upside. And they're like, okay, well, I'm hoping price will get back down. Okay, it's going back down. I'm losing less now. Prices tap and then continue going back, and before you know it, they're blowing their whole account, right? But that's not what we do here, okay? So this scenario here is a good start for controlling risk, okay? We're thinking about risk first because we want to protect our capital. We want to protect everything that we have in our account, right? We're thinking about saving our money first before making any money, okay? So in this case, this first scenario here is a good scenario, right? Because what you're doing is you're putting a risk and you're looking to target target your low right here for the profits, right? But there's a better way, okay? Okay, so in this case, like I mentioned, this is the 4 hour, right? Right here, the 4 hour. Okay, let's pretend this is the 4 hour supply, right? Okay, well, when we drop down from the 4 hour, we're going to eventually get down to the 15 minute and then eventually to the 1 minute. Now, notice how I dropped my risk to reward tool, right? To my risk to a small risk over here. Let me go over here, okay? Now, when we get to the 15 minute, we're going to wait for the 15 minute to do the same thing, to give us that change of character, like this, right, on the 15 minute, and potentially take that trade to this low here. Now, notice how small our risk becomes, right? Only because we drop down to the 15 minute and to reduce our risk, okay? This is very important because my mind is telling me, hey, I'm looking to protect my capital, save most of my money, and only risk a tiny fraction of what I'm about to risk, and then make more money, make more reward than my risk, okay? So this is why we talk about certain things like this in terms of risk before reward, okay? And my mentality, or our mentality, should be, we need to think about how to save our money. This is just one example of showing you how to save money, right? How to save and protect your account by controlling our risk to reward whenever we're looking for trades. Okay, just kind of quickly over here, okay, always get your mind away from thinking about how much money can I make, because the more we think about how much money we can make is the moment when you already are putting yourself in danger and when you're already are going to lose, because we're always about greedy, want money, even though that's the funny thing is the whole point of this whole markets, the Forex market, is to make money. But the markets are counterintuitive, which means that we're in the markets to make money, but we should actually think about not making money, but rather saving our money before we make that money. Do you guys understand what I'm saying? All right, that's how it works. Okay, so which brings me to this. To this down here, to this last or to this next subject here. Not everything in the market is tradable. All right, we need to get our heads out of the gutter here. Okay, everything in the market is not tradable. All right, and why do I say that? And this is going to be a huge topic on the next video that we're going to do, but I'm going to talk a little bit about on this video here. But not everything in the market is tradable, only because when prices are, let's say in this case, are going up like this, right? Or let's just use this scenario, okay? When prices are retracing down, breaking structure right to the downside, prices are retracing, okay? Notice how there can be so much manipulation that's happening, even on the retracement, right? When there are buyers that are thinking prices are, it's an uptrend from here, right? And they're probably looking to target the moon from here, right? But this information here isn't tradable. Right? We can't trade something that isn't in its own intended direction, like the major structure here, right? We see that major structure is going down, bearish. We see that minor structure is going up, right? And then substructure is coming down now, right? Not everything in the market is tradable, only because a lot of that information that's left in the markets are manipulation in the market. Now, what is manipulation? Manipulation is just essentially liquidity in the market. It's a form of liquidity in the markets, and we'll talk about all that in another video from now. But I just wanted to let you know that everything in the market is not tradable, right? Let me give you a few scenarios. For instance, right, when prices are let's say going up like this, prices are retracing, right, and you see this complicated retracement, and you're thinking to yourself, well, where do I buy, where do I sell, right? And you're waiting probably for price to come to a demand right here, right? There are people that are selling. People are seeing there's a break of structure to the downside like this, maybe one or two, one break of structure, another break of structure. Price. People are waiting for price to come here, right? You get a little reaction for a potential sell to come and reach the bottom here, right? But excuse me. But then what you find out here is price just breaks above, and you're like, but I was supposed to sell here, right? I was supposed to sell here, but price just took me out. It manipulated me, right? Well, these are the wrong times to look to sell, right? These are the wrong times, and this information here is not tradable, right? Because it doesn't tell us anything other than we're waiting for our markets either target an area of demand, then we're looking for the buys, right? We're waiting for the market to exchange from bearish to bullish here, right? And then we're looking for price to retrace and then to look for the extension. Okay, it's very simple to understand this. Okay, so if you're looking for the downside, something like this, right? Like if you see something like this, like what kind of sense can you make out of this, right? Like, can you make any sense out of any of this, right? A lot of people are buying here. There's a lot of people that are selling here, right? Everyone's getting a mixed information of signals on their own computer, right? They're thinking it's a buy, they think it's a sell, right? And this is where, as I mentioned, not everything in the market is tradable. That's because we need to wait for specific things to happen in the market. We need to wait for that manipulation to be taken out. All right, and we need to also wait for prices to recorrect themselves. We need to wait for prices to actually show us an extension. We need to see where banks are pouring all that money in, whether it's bullish or bearish, right? Whether it's supply or demand. We need to wait for those signals to happen first before we can make any other decision in the markets. Okay, so okay, this last question here is: what if we understood the psychology and how did the markets move? Right. Well, that's the bigger part of trading, okay? The bigger part of the trading is understanding the psychology behind trading. Now, you guys have probably heard about this, right? You're probably thinking, okay, well, you're just another guy who's talking about, okay, how to trade psychology, right? And that psychology is part of the markets. Yes, that's very true. But in order to understand this question here, okay, we have to obviously understand how the markets move. We have to understand the psychology part. Who's buying, who's selling, right? Where's supply, where's demand, right? So I'm going to go on the live chart quickly here just so I can kind of show you guys how it all works on a live chart example here. All right, let me move this over here, and then we can quickly understand this whole scenario in terms of this topics, right? Here, let me delete this here. Remove drawing. Okay. All right, let's look over here. Let's look right here to the bearish side over here. All right, as you can see, we have prices that are bearish, right? We're on the 4 hour right now. Okay, you can clearly see that we had a break of structure. Okay, you can see right over here where there were sellers that were selling fast. Right over here, there are sellers that got apparently, they sold way too early, right? We can see that there's inducement in this area where prices have come up and touched this inducement area, and it created liquidity, right, for this huge move to push down, right? Now, a lot of traders have gotten this, the 99% of the traders got this probably alert or whatever to look to sell here, right? Which is way too early, way too soon, because now we don't know what the true intention of that market is when prices retraced. We're looking for that corrective move, for the move to actually push to the downside. But what's interesting here is that when there's a retracement, right, And when you have that sort of area of supply ready, right, there are traders that already sold here so fast and haven't waited for a change of character or for price to recorrect itself in the market for that extension, right? There were traders that just took trades off right away into the market. I don't know why this is happening. Excuse me. There we go. There were traders in the market that were just selling off immediately without waiting for price to recorrect itself, right? So here's the recorrection, right? Here's that change of character when price did come back to come into a supply area right here. We can clearly see it right there, and you can see very closely that there is a inducement happening in this market right here. There we go. That's an inducement right there. All right, price barely even touched this order block here. Price retraced and touched it, took out this inducement, took out the liquidity, and then extended to the downside. Now, had we been patient, right? Now, had we been patient, okay? Because this whole video is about being showing you the 5 rules, 5 reasons why you lose money in the market. All right. Notice how we had a change of character here, and how we had a change of character right here. I mean, it's only one change of character, right? We had the high broken first, the low broken second, and then now we waited patiently for price to retrace back to an area of supply in this area, right? Right here. You could look to sell here, right, with a controlled risk like this. Now, I want to show you something. Obviously, we didn't touch this, right? So there's speculations where people can think, okay, well, maybe this is our supply area, right? This is our supply area. But what's happening here is that now price over here to this very high ran and took out that liquidity, that the inducement that was created in liquidity was just taken out, which means it mitigated this order block right here. Now we need to wait for price to recorrect itself again, only because price has been bullish here, right? And we have a minor break of structure to the upside right here, right? So what we need to see here now is for price to recorrect itself. You can see that change of character happening right here again. You can see the highs over here, right there, and this is where your sell would have been at that very point in time. Let me show you here. Okay, you could have had your risk to reward tool like this, right? To some of you, I encourage a lot when I encourage everyone whenever they're placing risk to reward tool is to put their risk just a little bit higher than the supply area like this, right? Just a little bit high so you can cover a potential wick or something that when price goes up to try and take you out when you have sold here, right? And then now we can extend our risk to reward tool, all right, to the bottom side like this, right? Now look at this. Look at this. Okay, you can target this current low here, all right? Now you can definitely tell the risk becomes completely different, right? Now, obviously, if we're even on a lower time frame, we can see what the we can definitely see what the risk could be here for us, where to take the entry exactly, right? I believe that the risk could have been even smaller. Let me actually no. Okay, there we go. Yeah. All right, there you go. All right, so you can definitely tell that the risk becomes a bit smaller. We have almost a 7% target right here, right? You can also look to target potential lows, like potential liquidity areas like this. Here's a low, here's a high, so you can target this liquidity area or this complete low right here, right there. If I can mark this out correctly, there we go, right? And notice how we targeted this low here, right? We can target this low. You don't have to target just this low, but you can target that low for a potential destination, and that would be an 8.4% right there. Okay, so let's look at it again. We have another break of structure right here, right? Price is retracing again, and then we're looking for an area where price hasn't mitigated yet, which is this area right here. You can see that price has stopped right here, retraced, and then broke out. You can see here again we had more inducement right there. Okay, price is tapped. You can see how there's so many sellers that sold here. They were chasing the market, or they're a breakout trader, I guess, whatever that is. I guess when price is breaking out of a structure and then they're just selling it immediately from this point, right? And now you can see over here, there's a lot of traders that are selling way too early. It's too fast. This is considered inducement in the market right here. these two areas, okay? And then what happens? Prices are running all that liquidity, taking all that liquidity right there, mitigating that last supply area, and then price is just going to the downside like this. Okay, so now when price gets up to here, we need to wait for price to do what? To do a change of character, right? So here's that change of character that you see. Prices reverse back up to an area of supply right here, and this is where your area of this is where you would look to sell. Okay, now you could look to take your risk to reward tool again, and obviously if you drop down to the lower time frame, you could control your risk and to reward from here, obviously, right? You can either target this current low here, or you can target something lower down here to the next order block that we can see over here, right there. This other this area of supply, demand right there, right? You could target this area right down here, right? And then now you have a greater reward than risk. Okay, obviously on the lower time frame, right, you could probably minimize this to a 50% risk right here. Okay, notice how we're taking action and we're only thinking about risk before reward. Notice that this area here, we had an area where price is 50%. We cut this zone here at 50%, and we minimize our risk even smaller. Now we're targeting 13%, and then we're risking 1% or 0.1%. Sorry, 0.5% here. We're only half of a percent, right? And there you go, right? So prices. This is what I'm talking about in terms of not being very careful, following your rules, right? Controlling your risk all the time, not being greedy in the markets. Okay, the greed you can see happens early on, or sorry, later on before prices retrace, right? Like you can see here, all that information right there. There's so many people that were so greedy that were trying to sell the market to try and probably tap the supply area, right? But you can see price ran up, right? This created liquidity. Price ran up, took these guys out. Price then mitigated right up here, actually. Oops. There's an area right there. Price mitigated the supply area. Maybe I should just do this better. Right there. Okay, and notice how, again, people were trying to sell here. All these traders were trying to sell here. But what's funny is there's no indication of price reversing, price changing, right? Price is still pushing to the upside, right? Until we get that change of character that we're all looking for. There you can see the change of character happening here, right? Price broke structure. And then here's an area where price is catching that flip zone that it's actually not a flip zone, I'm sorry. Price broke the structure here, so we're looking at this for potential area for price to get up here. If we went down to the lower time frame, we could look for potential sells here, because this is an area where price, well, you can see that there's a lot of break and retest traders here happening. But you can also sell here based off of a supply and demand. Okay, we saw that there's a lot of supply here and then a little demand creating. You can see that there's a change of character happening inside this area here. You could have looked to sell right here. Hence, as to how small our risk would have been here had we sold right there, right? Something like that. And then we would target this supply area. This demand area like this, right? So notice your risk. It becomes much smaller and your reward a lot bigger, right? So yeah, this is how it goes, guys. Okay, I'm going to show you a last example here on a bullish move, so you guys can see the whole picture here. As you see, we had an area where price broke structure here. All right, and then actually, let's look over here. This is going to be a very interesting one, because you're going to see how this is working here. Okay, all right. So if you look here closely, this is where people have sold way too, where they have bought way too early, right? Now you're going to think to yourself, well, yeah, okay, well, we can see all this move here, right? Well, I'll tell you this. As a trader, you need to adapt to how the markets are behaving, right? Because not every time price is going to come back to an area of demand for prices to to extend, right? You need to adapt to the market, right? We need to follow our rules. Okay, here you can see where prices haven't touched yet. This is area of inducement, another area of inducement. There's liquidity below now, right? And then you can see that prices ran up. They've broken structure. Now we can tell ourselves, okay, well, we have liquidity at the bottom here. We have people buying way too early, right? For whatever indication they may have had to look to buy the markets, right? But now we can adapt ourselves into the markets, and now we can see to ourselves, okay, well, all right, where's the last area of supply of demand, right? You can see that we had a change of character here, all right, and then that change of character came, tapped our area. We could have bought here if price is here, but and this is where what I'm talking about again, adapting to the markets, right? Now, this doesn't necessarily mean you're chasing the markets, right? Adapting and changing to the markets is two completely different things, right? You can adapt to the market's behavior and follow your rules, okay? But chasing the markets is another whole nother meaning, right? Where you are looking at the market and you're saying to yourself, okay, well, I'm looking to buy here, but well, what the heck? I'll just buy here in any case, right? And then just look to buy for no reason, right? You're just looking to buy because you're thinking the market's a buy based off of everyone's opinion, and which is the buy move that's happening here, right? Now, once prices are retracing, my typical anticipation here would be to wait for prices to touch this area of demand, because I don't believe that prices should just touch this area here and then wait for price to extend. Although it's not about what I believe, it's about what the market's behavior is, what the market's behavior in the market is, right? So you can see here how prices came low, extended, broke the structure here. All right, now we're anticipating for markets to retrace back. We can see that there's a sign of liquidity right there. You can see there's trendline liquidity as well, and this would be that low, this would be that high, right? This would be considered a protected low, this would be a high here, so therefore prices should typically come here and test, and we'd see what happens here in this area right here, whether price is going to respect this low, or is it going to tap this order block, this demand area, and then create a change of character for prices to potentially push to the upside. All right, as you can see, prices were respected once. Okay, here's that change of character right here, and here's where that area would have been for us to buy right there, right here. Once prices gave us that change of character, wait for price to come to demand, we buy, and prices shoot up. Okay, now this isn't all just because it wasn't all out of the blue. It wasn't because we are buying because of the sake of buying, because we saw another double bottom here, or a bottom here, right? We had rules that we needed to follow, okay? You can see how early on people have bought here, were manipulated to buy early, right? Because they were taught to buy off the double bottoms, right? But when people are buying too early or selling too late, or what have you, they're creating liquidity for the smart money concept traders like us, right? We understand that prices don't come. You can't just buy too early, because we need prices to come and retrace and take a breath or breathe a little bit before prices start to extend again for that full effect, for that full trade, right? So as you see over here, lastly over here, as you can see, there were traders that bought way too early, right? Created inducement and liquidity. Price took out that liquidity, and price came and touched, and then price extended. It's common sense when you understand the behavior, right? You can see these were the break and retest traders here. And you can see here, these were the smart money concept traders, the 1% traders. We wait for liquidity and for the dumb money traders to be taken out before we take that extension. All right. You can see again here, more buyers bought here out of nowhere, right? And now we're going to react and adapt to this move here, because this is a low, this is a high. Okay, so we would look for potential buys in this area, okay? Something like this. And you can see where price did react off of this area of demand here. Okay, it reacted, it was actually a retracement, and then once this low was broken, then that's when we can change our theory into our our bias, a directional bias to a sell, because this low was violated. Okay, obviously, just to end this video on a quick note here, you can see again there's so much manipulation happening to the upside, so much manipulation happening to the downside, guys. So just understand this, that you're going to be manipulated all the time. Okay, not everything in the market is tradable. You really need to be patient. Don't be greedy, don't be fearful, but be fearful only when people are greedy, and be greedy when people are fearful. Okay, and always make sure to understand that wherever the direction of that market is, you just need to wait for, if in order to know where the direction of the market is, just wait for price to break out rapidly. Okay, because that's a sign of where the banks are just dumping so much money in, and that's where we're looking to profit from when prices do retrace eventually. Okay, and just lastly, okay, just wanted to show you this right here. You can see here how prices have extended rapidly. So that's when we get the anticipation to wait for prices to come back and retrace for another area where price can extend, and we can take advantage of these, right? You can see again, prices overextend quickly, rapidly, prices retrace, and that's when we look to take advantage of these markets, right? Very easy, very simple. All right, guys, I hope you learned a thing or two about what I was talking about. If this video was helpful, please give me a thumbs like or a thumbs down, and subscribe to the channel. I really want to know what you guys are thinking. I can definitely, run more videos on this by next week. And thank you guys for watching. Until then, we'll see you soon.
Nothing can stop me. I'm all the way up.